Based on the historical data and forecast, Bitcoin demonstrates a strong upward trend. The price has consistently broken through resistance levels, and the forecast for the next week predicts continued growth. The RSI values, while fluctuating, generally remain above 50, indicating bullish momentum. The Bollinger Bands show that the price is currently trading near the upper band, suggesting a potential for further upside. Considering these factors, I recommend a long position strategy. We will enter a long position at $96,300, placing a stop-loss order at $95,600, just below the support level. The initial target price will be $98,000, aligning with the forecast for May 4, 2025. To maximize potential returns, we will employ a dynamic target price strategy. If the price reaches $98,000, we will move the stop-loss to break even, securing our initial investment. If the price continues to rise, we will set a second target price at $99,200, corresponding to the forecast for May 6, 2025. Finally, if the upward momentum persists, we will aim for a third target price of $99,700, aligning with the forecast for May 8, 2025. This strategy combines trend following with dynamic risk management, offering a high reward potential while protecting against downside risk. Based on the historical data and forecast, Ethereum exhibits an upward trend, consistently testing and bouncing off the support price of $1,790. The RSI values fluctuate between 40 and 58, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening recently, suggesting increased volatility and potential for price movement. Considering these factors, I recommend a long position strategy with an entry price of $1,820 on May 3, 2025. A stop-loss order should be placed at $1,790 to limit potential losses, coinciding with the established support level. The initial target price should be $1,860, aligning with the forecast for May 5, 2025 and the upper Bollinger Band. To refine the strategy, we will incorporate RSI and Bollinger Band signals. If the RSI falls below 20, indicating an oversold condition, a long position can be initiated. Conversely, if the RSI exceeds 80, suggesting an overbought state, the position should be closed or a short position considered. If the price touches the lower Bollinger Band, it signals a potential buying opportunity, while touching the upper Bollinger Band suggests a potential selling point. Combining these indicators, I suggest adjusting the target price to $1,870 on May 9, 2025, if the RSI remains below 60 and the price stays above the center of the Bollinger Bands. This blended strategy maximizes profit potential while mitigating risk through dynamic adjustments based on technical indicators. Based on the historical data and forecast, XRP shows a slight upward trend with consistent support at $2.06 and resistance at $2.22. The RSI fluctuates between 47.7 and 60.7, indicating periods of neither strong overbought nor oversold conditions. The Bollinger Bands show that the price has been trading within the bands, with the top band consistently above the price, suggesting potential for upward movement. Considering these factors, I propose a strategy that combines RSI and Bollinger Bands to maximize returns. We will initiate a long position when the RSI dips below 50 and the price touches the lower Bollinger Band, aiming to capitalize on potential rebounds. Specifically, we will enter a long position at $2.19, placing a stop-loss order at $2.06 to protect against downside risk. The initial target price will be $2.22, coinciding with the resistance level. If the price reaches $2.22 and the RSI remains below 80, we will adjust the target price to $2.3, aligning with the upper Bollinger Band. This multi-stage target approach allows us to capture incremental gains while managing risk effectively. This strategy aims to generate high returns by leveraging the momentum of potential price rebounds within the established support and resistance levels. Based on the historical data and forecast, BNB shows a slightly bullish trend, bouncing between the support of $552 and the resistance of $618. The RSI consistently remains between 50 and 60, indicating neither extreme overbought nor oversold conditions. The Bollinger Bands have been widening slightly, suggesting increasing volatility. Given these factors, I propose a combined strategy leveraging RSI and Bollinger Bands to maximize returns. First, we will implement a strategy based on the RSI. We will enter a long position when the RSI dips below 50, aiming for a target price of $606. The entry price will be $599. To manage risk, we will set a stop loss at $552. Second, we will utilize the Bollinger Bands for confirmation. If the price touches the lower band, it signals a potential buying opportunity. Considering the forecast, we will enter a long position at $603, with a target price of $606, and a stop loss at $599. Combining these two strategies, the most efficient portfolio will be to enter a long position at $599, with a target price of $606 and a stop loss at $552. Based on the historical data and forecast, Solana demonstrates a generally upward trend, consolidating within the $139 to $150 range. The RSI consistently fluctuates around 60, indicating neither extreme overbought nor oversold conditions. However, the forecast for the next week shows a slight downward pressure, with prices hovering around $148 to $150. Considering this, I propose a moderately bullish strategy. We will enter a long position at $148. A stop loss should be set at $146 to limit potential losses if the price declines. The initial target price will be $151, aiming to capture a reasonable profit from the upward trend. To refine this strategy, we will incorporate the Bollinger Bands. The price has been consistently trading near the upper band, suggesting a potential pullback. If the price touches $148, we will enter a long position with a stop loss at $147. The target price will be $152, capitalizing on the potential rebound. This combined RSI and Bollinger Band strategy offers a balanced approach, leveraging both momentum and volatility indicators to maximize returns while managing risk effectively. This portfolio combines the best of both strategies to achieve high returns. Based on the historical data and forecast, Dogecoin shows a slight upward trend. The price has been fluctuating within the support of $0.173 and resistance of $0.195. The RSI values, mostly between 40 and 60, indicate that the asset is neither significantly overbought nor oversold. The Bollinger Bands have been widening recently, suggesting increasing volatility. Considering these factors, I propose a moderately bullish strategy. We will initiate a long position when the RSI falls below 30, indicating an oversold condition, and the price touches the support level of $0.173. The entry price will be $0.173. The stop loss will be set just below the support level at $0.171 to minimize potential losses. The initial target price will be the resistance level of $0.195. To refine the strategy, we incorporate the Bollinger Bands. If the price bounces off the lower band and the RSI starts to rise, it's a strong confirmation of a potential upward move. If the price reaches $0.195, we will move the stop loss to the entry price of $0.173 to lock in profits. If the price continues to rise, the next target will be $0.195 plus $0.02, which is $0.197. This strategy combines the RSI oversold signal with Bollinger Bands confirmation to improve accuracy. The portfolio will consist of 60% of the capital allocated to this strategy, and the remaining 40% will be allocated to other assets to diversify risk. The predicted forecast price of $0.187 on May 8, 2025, further supports this bullish outlook. Based on the historical data and forecast, Cardano shows a slight upward trend. The RSI fluctuates between 45.0 and 61.4, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increasing volatility and potential for price movement. The support price remains consistently at $0.624, while the resistance price was $0.701. Considering the forecast for the next week, with prices hovering around $0.703 to $0.722, I recommend a moderate long position. My strategy involves entering a long position at $0.699, capitalizing on the upward trend and recent price movements. The stop loss will be set at $0.683, just below the recent low, to mitigate potential losses. The initial target price is $0.722, aligning with the forecast high for the week. If the price reaches this target, we will reevaluate based on the RSI and Bollinger Bands. If the RSI approaches 80 or the price touches the upper Bollinger Band, we will consider taking profits or tightening the stop loss. This approach balances risk and reward, aiming for high returns while protecting capital. Based on the historical data and forecast, TRON shows a slightly upward trend. The price has been fluctuating within a range between 0.239 and 0.248. The RSI consistently remains between 50 and 60, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation. Considering the forecast for the next week, with prices hovering around 0.25, I propose a moderately bullish strategy. We will initiate a long position at $0.249 with a stop loss placed just below the support level at $0.238. Our target price will be set at $0.252, aligning with the upper end of the recent trading range and the forecast. To refine this strategy, we'll incorporate RSI signals. If the RSI dips below 20, which hasn't occurred recently, we'd enter a long position at that low point with a stop loss at $0.238 and a target of $0.252. Conversely, if the RSI exceeds 80, which is also unlikely, we'd consider a short position at $0.252 with a stop loss at $0.254 and a target of $0.244. However, given the current conditions, the primary strategy remains the long position at $0.249, stop loss at $0.238, and target price at $0.252, capitalizing on the anticipated upward movement. Based on the historical data and forecast, SWAY demonstrates a clear uptrend. The price has consistently been bouncing off the support level of $2.77 and approaching the resistance level of $3.55. The RSI indicates that the asset is currently within a neutral range, fluctuating between 45 and 77, but trending upwards. The Bollinger Bands show a widening band, suggesting increasing volatility and potential for price movement. Considering the forecast for the next week, which predicts a continued upward trajectory with prices ranging from $3.55 to $3.73, I recommend a long position. My strategy involves entering a long position at $3.55, coinciding with the current resistance and the beginning of the forecast period. To mitigate risk, I'll set a stop loss at $3.42, just below the recent price action. For the target price, I'll aim for $3.73, aligning with the highest forecast price. This strategy leverages the predicted upward trend, the support and resistance levels, and the RSI and Bollinger Bands to maximize potential returns while minimizing downside risk. This portfolio will be the most efficient of the three strategies. Based on the historical data and forecast, Chainlink exhibits an overall upward trend, consistently testing the 15.0 resistance level and bouncing off the 14.3 support. The RSI fluctuates between 49.0 and 63.5, indicating periods of both neutral and slightly overbought conditions. The Bollinger Bands have been widening, suggesting increasing volatility. Considering the forecast for the next week, which predicts prices hovering around $14.7 to $14.9, I recommend a long position strategy. We will enter a long position at $14.7. The stop loss will be set at $14.3 to protect against a potential downturn, aligning with the established support level. The initial target price will be $15, aiming to capture a quick profit as the price tests the resistance. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI dips below 20, indicating an oversold condition, we'll consider accumulating more positions at $14.6, with a stop loss at $14.3 and a target price of $15. Conversely, if the RSI reaches 80 or above, signaling an overbought scenario, we'll consider taking profits at $14.9, with a stop loss at $14.7. This dynamic approach, combining trend analysis, support/resistance levels, and RSI/Bollinger Band signals, should maximize returns while mitigating risks. The portfolio will be 60% based on the trend and future direction, 20% based on the RSI, and 20% based on the Bollinger Bands. Based on the historical data and forecast, Turbo shows a clear upward trend. The price has been consistently making higher highs and higher lows, and the forecast for the next week indicates continued growth. The RSI values have frequently crossed above 70, suggesting overbought conditions, but the price has continued to rise, indicating strong bullish momentum. The Bollinger Bands have also been expanding, confirming the increasing volatility and upward trend. Considering these factors, I recommend a long position strategy. Specifically, we should enter a long position when the RSI falls below 30, which indicates an oversold condition. The entry price will be $0.00454. To manage risk, the stop loss should be set just below the support level at $0.0044. The initial target price will be set at the next resistance level, $0.00565, aiming for a quick profit. To further maximize returns, we can implement a trailing stop-loss strategy. Once the price reaches the initial target of $0.00565, we can move the stop-loss to the recent swing low, around $0.00493. This allows us to capture more of the upward movement while protecting profits. If the price continues to rise, we can adjust the target price to the next significant resistance level. Given the forecast prices, a reasonable target price would be $0.00586. This combined strategy offers a balance between capitalizing on the strong upward trend and mitigating potential losses through effective risk management. The portfolio will consist of 80% long position, 10% short position, and 10% cash. Based on the historical data and forecast, Curve DAO shows a clear upward trend. The price has consistently tested the support level of $0.647 and is approaching the resistance level of $0.768. The RSI indicates that the asset is currently in a neutral zone, not oversold or overbought. The Bollinger Bands suggest that the price is nearing the upper band, indicating potential for a breakout. Therefore, I recommend a long position with an entry price of $0.725. To manage risk, set a stop loss at $0.647, just below the established support level. For the target price, aim for $0.801, aligning with the forecast price and providing a buffer for potential price fluctuations. This strategy combines trend analysis, RSI, and Bollinger Bands to maximize potential returns. We will enter a long position at $0.725, anticipating the upward trend to continue. The stop loss at $0.647 protects against unexpected downturns, while the target price of $0.801 allows for significant profit. This portfolio prioritizes the forecast data and the upper Bollinger Band as indicators of a bullish momentum, aiming for high returns while maintaining a reasonable risk-reward ratio. Based on the historical data and forecast, SUN token shows a slight upward trend with price fluctuating between the support of $0.0171 and resistance of $0.0192. The RSI indicator has been oscillating around the mid-level, currently at 62.0, suggesting a neutral to slightly bullish momentum. The Bollinger Bands show that the price is currently near the upper band, indicating a potential for a slight pullback. Considering these factors, I propose a long position strategy with an entry price of $0.018. To manage risk, set a stop loss at $0.0171, just below the support level. For the target price, aim for $0.0183, aligning with the forecast and the upper end of the Bollinger Bands. To refine this strategy, I'll incorporate RSI signals. If the RSI falls below 20, indicating an oversold condition, consider entering a long position at $0.0163, with a stop loss at $0.0155 and a target price of $0.0183. Conversely, if the RSI rises above 80, signaling an overbought condition, consider exiting the long position or shorting at $0.0182, with a stop loss at $0.0183 and a target price of $0.0171. The most efficient portfolio will be a combination of these three strategies, prioritizing the initial long position at $0.018 with adjustments based on RSI signals to capitalize on short-term fluctuations. Based on the historical data and forecast, Bitcoin Cash exhibits a clear uptrend. The price has been consistently bouncing off the support level of $339 and attempting to break through the resistance level of $425. The RSI values, fluctuating between 53.5 and 66.1, suggest that the asset is neither excessively oversold nor overbought, indicating a healthy momentum. The Bollinger Bands show that the price is currently trending above the center band, further reinforcing the bullish outlook. Considering the forecast for the next week, with prices projected to rise from $373 to $392, I recommend a long position. Entry price should be $373, with a stop loss placed just below the recent low at $360 to limit potential losses. The target price is set at $392, aligning with the forecast high, offering a substantial return. To refine this strategy, we'll incorporate RSI levels. When the RSI dips below 20, it signals an oversold condition, potentially offering a buying opportunity. Conversely, an RSI above 80 suggests an overbought condition, indicating a possible pullback. However, given the current upward trend, I prioritize the long position based on the forecast and Bollinger Bands. This approach combines technical indicators with price action and future projections to maximize the likelihood of high returns. The final portfolio will be a 70% allocation to the long position strategy and 30% allocation to the RSI strategy. Based on the historical data and forecast, EOS shows an overall upward trend with recent price fluctuations. The support price remains consistently at $0.684, while the resistance is at $0.858, indicating a potential trading range. The RSI fluctuates around 50, occasionally reaching overbought levels above 70, suggesting periods of strong buying momentum. The Bollinger Bands have been widening recently, which implies increased volatility and potential for price swings. Considering this, I propose a strategy that combines RSI, Bollinger Bands, and support/resistance levels to maximize returns. My recommended strategy is to enter a long position when the RSI dips below 30, indicating an oversold condition, and the price touches the support level of $0.684. The entry price will be $0.684. Place a stop-loss order at $0.65, just below the lower Bollinger Band to protect against unexpected downside movements. The initial target price will be $0.758, aligning with the forecast price for May 9, 2025, and the upper Bollinger Band. If the price reaches this target, consider moving the stop-loss to break even to secure profits and allow for further upside potential. If the price breaks through the resistance level of $0.858, adjust the target price to $0.90. This strategy aims to capitalize on the upward trend while managing risk through strategic stop-loss placement and profit-taking targets. Based on the historical data and forecast, Kaia demonstrates an upward trend. The price has consistently tested the support level of $0.113 and has been approaching the resistance level of $0.126. The RSI has fluctuated but generally remained above the oversold level of 20, indicating bullish momentum. The Bollinger Bands show that the price is currently near the upper band, suggesting a potential for further upward movement. Therefore, I recommend a long position strategy. My strategy involves entering a long position at $0.121, coinciding with the initial forecast price and the recent upward trend. A stop-loss order should be placed at $0.113, just below the established support level, to limit potential losses. The target price is set at $0.133, aligning with the final forecast price and allowing for a significant profit margin. This strategy combines the bullish signals from the trend, RSI, and Bollinger Bands, offering a high return opportunity while managing risk with a well-defined stop loss. Based on the historical data and forecast, Render shows a clear upward trend. The price has been fluctuating between a support of $4.51 and a resistance of $6.71. The RSI consistently stays above 50, indicating bullish momentum. The forecast for the next week predicts a continuous rise, reaching $5.22. Considering these factors, I recommend a long position. We will enter a long position at $4.79, with a stop loss set at $4.51 to mitigate potential losses. The initial target price will be $5.04, based on the forecast and the resistance level. To refine the strategy, we'll incorporate the Bollinger Bands. The price has been trending above the upper band recently, suggesting a potential pullback. If the price retraces to the upper band around $4.79, we'll re-enter the long position with a stop loss at $4.51. The second target price will be $5.22, aligning with the forecast peak. This combined strategy leverages both RSI and Bollinger Bands for enhanced risk management and profit potential, aiming for high returns while minimizing downside risk. Based on the historical data and forecast, Bittensor shows a clear uptrend with consistent price increases. The RSI consistently remains above 60, indicating bullish momentum. The forecast for the next week predicts continued upward movement, reaching $391. Considering the support price of $357 and the recent price action, I recommend a long position. The entry price should be $372. The stop loss should be set just below the support level at $356 to protect against potential pullbacks. The initial target price should be $385, aligning with the forecast high for the week. To refine this strategy, we'll incorporate the Bollinger Bands. The price has been consistently trading within the upper Bollinger Band, suggesting strong bullish pressure. If the price touches the lower band, which is currently around $158, it signals a potential oversold condition, but given the overall uptrend, this is unlikely. If the price reaches $385, we'll move the stop loss to $375 to lock in profits and reduce risk. The final target price should be $391, coinciding with the forecast high. This portfolio combines RSI, Bollinger Bands, and support/resistance levels to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Arweave exhibits a clear uptrend. The price has consistently been making higher highs and higher lows, supported by the Bollinger Bands consistently trending upwards. The RSI has been fluctuating but generally above 50, indicating bullish momentum. Given this trend, I recommend a long position strategy. We'll use a combined approach leveraging RSI, Bollinger Bands, and support/resistance levels for optimal risk-reward. The strategy will involve entering long positions when the RSI dips towards 40 to 50 and the price touches the support level of $7.23. Specifically, on May 3, 2025, with a forecast price of $7.55, enter a long position at $7.55. Set a stop-loss order at $7.23 to protect against a potential reversal. The initial target price will be $8.48, aligning with the forecast for May 9, 2025. If the price reaches $8.48, consider taking partial profits and moving the stop-loss to break even. If the price continues to rise, adjust the target price incrementally based on subsequent resistance levels. This approach combines trend following with risk management, maximizing potential returns while minimizing downside exposure. Based on the historical data and forecast, Pudgy Penguins shows a strong upward trend. The RSI consistently moved above 50, indicating bullish momentum, with peaks above 70, suggesting overbought conditions but not sustained corrections. The Bollinger Bands have been expanding, confirming the increasing volatility and potential for further price increases. The forecast for the next week predicts continued upward movement, with prices hovering around $0.011. Considering the support price of $0.0106 and the resistance of $0.0127, I recommend a long position strategy. My strategy involves entering a long position at $0.0106, coinciding with the support level and a potential pullback. A stop-loss order should be placed at $0.009 to protect against unexpected downturns. The initial target price is set at $0.012, aligning with the resistance level. If the price breaks above the resistance, the target price should be adjusted to $0.013. The RSI indicates a potential for a slight pullback, so a gradual accumulation strategy might be beneficial. The Bollinger Bands suggest that the price may continue to move within the upper band, providing further confirmation of the upward trend. This combined approach aims to maximize profits while minimizing risk, capitalizing on the predicted upward momentum of pudgy penguins.